All right, welcome everybody who's attending here. I want to thank you first of all for considering to sit down for 45 minutes or something and listening to me ramble on about the markets. I had thought about this. I should introduce myself. This is Elliot here from bullweights.org. I'm an Elliott wave analyst, and I like to approach the market. Really, I suppose I tend to have a real contrarian bent to my thoughts. I'm just probably born with that. Maybe it's my heritage. I'm from Ireland, so we like to look at things slightly awkwardly, maybe. Okay, so I'm going to take you through the markets that I usually follow. I'm not going to get out of my comfort zone here. I'm going to stick with what I know, and I'm going to take you from a wide-angle perspective, from weekly charts right down to hourly charts on each of the markets. And you will get a pretty clear picture of where I think we stand and where I think we're going to go. If we all manage to live through the current, burgeoning destabilization that's happening in the world. But apart from that, we're all alive today, and we're going to enjoy the next 45 minutes, and I'll give you my picture of what I think is happening. Anybody does know me, you know that I have a pretty bearish bent on my analysis at the moment anyway. When everybody's bullish, I'll be completely bearish. When everybody's bearish, I'll be completely bullish, and you all think I'm stupid all the time. It's the kind of the way it works with a contrarian view, someone with a contrarian viewpoint. Okay, so I think the best thing to do is just get into it, and you'll follow me along. Give me a few minutes, and you'll get my my modus operandi. Okay. Right, I'm going to move on to the scene here, and we will. There. Hopefully, everybody has my chart in front of them, and hopefully, you can all still hear me. Okay. Right now, it is it's Labor Day in the U.S., so the markets are closed in the U.S. This is pre-recorded by a couple of days. I'm sorry about that. I'm 5 hours ahead of everybody in the U.S. So, by the time you're finished work, I'm already asleep. So, this, I think the only way to really, for me to do this anyway, was to pre-record it. I want to thank the organizers for inviting me to do this. So I'll give it my best shot, and hopefully you gain something from this. Okay, this is Eurodollar. So this would probably be the heaviest, apart from the dollar index, this would be the most heaviest traded dollar pair or dollar, gauge. Or sorry, I'm going to have to drink constantly here as well. So I think this is probably the best gauge for, let's say, the positioning of the dollar or the future prospects for what should happen in let's say dollar value generally. Okay, so what I think is actually happening here over the last, we could say, going on 7 years now. I think there is a very large, just sideways ranging correction going on. We had back in 16, 17, we had a major rally from nigh on near par, like 103 low to about 125 high, and this rally, I remember was happening at the backdrop of a resounding kind of message in the media that the dollar was dying. I think you all remember the US dollar's dead, get out of the US dollar, and so on and so forth. And, everybody was trading everything and anything, buying anything that they could find, to get out and away from the US dollar. That was it was a year-long rally, but in terms of the larger market, it was, pretty much just a blip. I think ever since that, 2017 high there, what was that? Oh, sorry, early 18, so February 18 high. I think what we've done is correct in Elliott wave terms. We've corrected probably in a zigzag pattern lower. So a 5-wave, 3-wave, 5-wave correction lower. Now, I may have to do some, jump through some hoops to make this fit, but overall, I think you can pretty much say that, despite falling to new lows below the previous start of this pattern, we have just tracked lower in three waves overall. We are on a weekly scale now. We are more oversold than we were, back in the 2019 lows. We're more oversold. Well, we're approaching the oversold levels that we were back in 14 and 15. So at this point, I know that this is the weekly chart is not a timing tool, but we should be positioning, or not positioning, but becoming comfortable with the idea that this market could swing here, and I think it could swing quite violently, to be honest. It'll take time to play out, but my, let's say, favored outcome here would be for us to find a low pretty soon, and track higher again for the medium term anyway, probably 1 to 2 years, in a C wave. So this would be a 5-wave pattern overall, not dissimilar to what we've got here in the A wave rally. We could probably, not dissimilar to what we've got there, but a nice impulsive looking move to it. And I think it'll probably take over a year, 18 months to play out. But I think if my timeline, in a longer term timeline, I think what I would be looking at is buying the euro rather than jumping onto a finishing trend in the dollar right now. Like I said, despite the fact that we've broken to new lows in the last few weeks, I think this will probably it'll probably resolve as what we would call in Elliott wave terms as an expanded flat correction. So we've got a rally, a new low, and then a rally to a new high. So we'll break out above 125 if this pattern remains. We should break out to a new high above 125.50 there, and that'll complete a long-term correction, 7-8 years of a correction sideways in wave B, and then I think we should probably be looking towards a world without the euro. If this C wave comes in, I think countries will start ditching the euro then. Member countries will start ditching the euro. Okay, if we go down, I think I'll probably go to the daily chart, and let's see if we can bring anything. No, the daily chart won't really elucidate anything else there. So let's get into the 4-hour chart here. Now, I am tracking a C wave down here. So this would be wave B. We've already talked about the new low that's been created in a B wave here. So I'm actually tracking this B wave low to find a final low pretty soon. This B wave low will be made, or is made up of overall 3 waves down. And that's denoted by that C wave here. And this C wave itself is broken out into a 5-wave pattern. And that 5-wave pattern, wave 5 of that 5-wave pattern is what you can see here, wave 1, 2, 3, 4, 5. I think what we could be tracking here is a possible ending diagonal. Now we can go both ways on this. This would be where the overall trend is coming to an end. The internal waves start overlapping. We get kind of choppy action rather than what would normally be associated with a 5-wave pattern would be pretty impulsive, accelerative moves in the direction of the main trend. But what you can actually see here is the corrections are retracing quite high into the previous wave. Overall, I think we can probably start breaking the internal motive waves are breaking down into 3-wave patterns. You can see that probably most clearly here. So it remains to be seen whether this breaks into a 3-wave pattern to find a new low before a reversal happens. But on the 4-hour count here, you can see that I'm tracking, let's say, the final move down within this final B wave here, or this B wave low. Now we could go lower. I mean, we could head towards 97 to complete this pattern. I'm not quite sure on that. This, it's a day-by-day thing here. The daily moves or the hourly moves, influence how the 4-hour pattern, is going. The 4-hour pattern is influencing how the daily pattern is unfolding. So each of these things are kind of nested patterns within a larger kind of trend, let's say, and it can kind of change on a dime in some at times it can change on a dime. So I think we are overall we're coming to a new low, and I think it'll be a final low to complete a B wave. And that B wave, like I said, if we go out to the larger pattern, that B wave will result in a rally up in a C wave again. So we track to that B wave low, and then we rally into wave C. So we'll go back to that 4-hour pattern there again. So you can see I'm tracking this wave 5 of C of wave B. And if we go down to the hourly count here, you can see how I'm breaking out this final decline into wave 5 here. Over the last, let's say, week and a half, or the guts of a week anyway, we've basically flatlined in euro dollar. Now, this is pretty typical corrective move. I think you could either call this a 4th wave correction or a B wave correction. So if we are going to trace out 3 waves finally to complete the larger pattern, then this will be a B wave. This will be a B wave high, and we will create a final decline in a C wave. That's kind of more technical than you need right now, but overall, I am, let's say, tracking the final nested pattern within the larger move. So I think you can even see it in the pattern itself. Despite the fact that we've made a new low, we basically have gone sideways over the last 2 months. So if we've gone sideways for the last 2 months, we've caused enough of a momentum slowdown for, let's say, I think, positions to close out, for the market to let's say the viewpoint of the market to become substantially entrenched, and maybe we're creating the scenario, or let's say the environment where an alternate scenario could materialize. So I'm getting too complicated here in my verbiage. I'm going to try and get less complicated and be more colloquial. Right. I think what we're doing is we're slowing the momentum, and I think we're building the final pattern, and I think we will see a reversal pattern pretty soon. This reversal pattern in euro dollar will probably, mirror itself, let's say, in dollar yen and in the Dixie as well. So the dollar index will top out and turn down, while euro dollar will bottom out and rally. Again, like I said, go back to the longer term pattern here. If this pattern here in a B wave correction is correct, if the correction is correct, then I think we'll see a long term extended rally, probably back towards 126 again. And this, I think, will be against the backdrop of a collapse in probably a collapse in risk markets. So risk assets in general, I think, would collapse along that backdrop as well. Okay, so right now, I think, well, probably gone deep enough into euro dollar there, and you can surmise from that the opposite pattern, basically the opposite pattern in the dollar index. Okay, so I'm going to move on here. I'm going to go to pound dollar. Now, pound dollar being the other major transatlantic pair, we should have a kind of a, if not a similar pattern, a kind of a mirroring pattern here. So I think what we are tracking in pound dollar here on a weekly pattern anyway is, again, a long-term sideways move. We've ranged sideways. We completed a correction back in mid 2021, and we moved lower again. So we corrected sideways in a B wave, and we declined again. Not quite to a new low, but we'll probably get to a new low below, possibly below 114 again to complete this wave 1 down. So what I'm actually tracking here is a wave 1 of C. So I think in terms of the larger, let's say, weekly pattern, I think cable is probably one step ahead of Eurodollar. I do think we'll correct higher, so I'm tracking the end of this wave one pattern right now. I think we'll rally quite substantially. We're down around 115 now. I think we'll probably see 130 again, maybe even slightly above it, before this second wave correction to a higher low, or sorry, a lower high is finished. And again, that'll probably happen over the next year or so. Now, if we have wave A done in black here, and we have a three-wave correction in wave B done, then overall we should see a larger, longer-term decline, and it'll be sustained decline in wave C. So that C wave, again, it'll be a multi-year decline. I do think it'll be quite catastrophic for cable in general. And, I get the feeling that we may even see 50 pence or 50 cent on pound dollar if this pattern is correct, before we bottom long term in a few years' time in wave C and we rally substantially again. So what kind of backdrop is happening here? If this is the longer term pattern economically, I think, well, if cable is declining such catastrophically like that, it'll probably be incessant inflation in cable, or money printing anyway. In general, I think the world economy is probably going to step into a depression. So if that's the case, it really depends on how hard governments want to push it. Generally, the price level will probably still flatline or decline, probably decline actually overall, if we go into an economic depression. But I think cable itself will probably still decline in terms of pattern anyway. Okay, overall, long term. Now, in the shorter term, in the next year, maybe I think we see a lower high build, probably up around 130 or so. I'm going to go actually into the 4-hour pattern here, and we'll expand this final decline in wave one here a little bit. Let's get in here. Now you can see this the low of wave one is coming up pretty soon, and you can see we have overall an extended pattern lower. I'm not going to be able to pull all this into screen, but you can see this final fifth wave down. The 5-wave pattern in wave one, is the decline into wave one in blue is breaking out into a 5-wave pattern. So if we go further back, we'll get a 1-2 pattern in red, then we get this 1-2 pattern in green, and an extension in a 3rd wave, a 4th wave correction, a 5th wave decline. So that's wave 3 done in red. Then we have a sideways correction in wave 4 over the last, let's say, 3 months or so. And then we have a final decline in wave 5. So this 5th wave decline here, the question is, are we close to being done in that final decline? And if we go to the hourly count, I'll show you. I think in general we are quite close to finding a low. Maybe we dip to a new low below that 114 level there. Most likely we probably will. But in terms of the larger patterns, we're going to find a low pretty soon in cable, and then we'll turn higher. Like I said, we got a series of 4th waves consolidations. You can see there's this shoulder consolidation here around 130. We've got a consolidation here around 126. I think this second wave rally will probably push back towards that 130 level, as I mentioned before. Here's the hourly count. So you can see this final wave down in wave 5 red is broken out into 5 waves itself. So we have the wave 4 high. We've got wave 1 down, wave 2 up. Again, an extended pattern in wave 3. We're going to see some sort of 4th wave correction now over the next week or so, and then we'll dip finally into a decline in wave 5. So I think this will be a capitulation move. It'll be, when everybody has given up and everybody and his mother says that, cable will never rally again, and the currency is falling apart. That's the backdrop you want to look for in the headlines. That's the backdrop that's going to give you a contrarian, let's say, medium-term bet anyway. So I think there's a second wave correction coming. We find a low. It's probably, if we do bottom out around or below 114, so let's say for pig iron we go to 113, complete the pattern. I think then if we get up to 130, that gives us 1,700 points. There's a 1,700 point rally, 3 waves correction higher coming. It's not going to be a long term buy-in hold unless you're buying currency cash itself. Not many people actually do that, but let's see. I think we'll find a low pretty soon, and we'll rally in a second wave correction. And just keep that number in the back of your head there, between 126 and 130. Okay, so dollar yen. We'll go to the weekly chart here. This was the long-term pattern that I was working with in dollar yen for a significant period of time. You can go back to late December 2020, and we were completing the low of this triangle pattern. So we had a long a long winding road to nowhere in dollar yen over, say, a 4-year period, and that was a B wave triangle in my mind all day long. You can go back to my YouTube videos and you can see, what I was thinking about and what I was thinking about that pattern and what I thought was coming. I was actually projecting, a minimum of 125, and we rallied way higher than I even thought that. I was super bullish back here, but it rallied much higher than I thought it would. But now, looking at the channel that's playing out right now, it's a three wave correction higher, possible 3 wave correction higher in dollar yen. It's a zigzag pattern overall, so five waves up in wave A, correction, triangle correction wave B. Forgive me, it's a complex correction. 5 up in A, triangle B, and 5 up in C. So this could be a third wave rally. At the moment, I'm gonna stick with the C wave scenario. But this 3 waves up will probably push towards 150 when complete. I'm pretty well convinced that we're going to see an extended decline pretty soon to finish a correction here in wave 4. But I'll get into that in a little bit more detail in a few minutes. So we're tracking out a 5 wave pattern higher, and we will complete C wave rally more or less around the 150 level. And again, it's going to extend out into next year by the time this is done. And then at that point, it'll be a case of figuring out whether this is actually only 3 waves up or whether we're building a larger 5 wave pattern higher. And that is, where discernment will come in once we start hitting those highs up around 150. That is, okay, I don't know the future, I'm just applying a pattern. That is, if this pattern actually holds, and that's always the question. From day to day, you yourself, that if you follow patterns, whichever kind of framework that you use yourself, a pattern can hold and it cannot, or it can go both ways. So it's kind of like it's the reason why you kind of have to work on this daily, basically. In my case, hourly. Okay, so I think right now we are actually in the throes of correction, believe it or not, in dollar yen, even though we've broken to a new high. Again, this is kind of like the mirror of what's happening. New lows in euro dollar, new multi-year lows, new multi-year highs in dollar yen. But I think this is part of a 4th wave correction here. I think what we're doing here is we're tracing out an expanded flat correction. So that'll be 3 waves down in A, 3 waves up in B, and then a 5 wave decline in wave C. I'm looking at that 126 level for wave C to close out. And again, this is a longer term pattern, so 4-hour chart, so it'll be a medium term pattern. I'd say I'm looking at the next 6 or 8 months here for this 4th wave pattern to close out. Okay, so I'm going to go down into the hourly chart, and I will pick apart this recent rally here, and I'll show you what I'm thinking about in terms of that rally. Okay, so you can see this B wave high is what I'm tracking here, and you can see by the indications I'm giving for my subscribers that we're probably coming to a pretty substantial high pretty soon. And once that's in place, I'll be looking lower for an impulsive move lower and what you'd call like a bearish lower high to build in a second wave here. The three-wave pattern is sporting a very large extended wave in wave C, but nonetheless, it's a five-wave pattern and it is extended. It's just overextended right at this point. And that's basically what gets you out to a new high in a B wave is, an overextension. People kind of linearly extrapolating the previous rally. So what people are actually doing in their minds now, whether they want to admit it or not, is they're actually extending this rally, or they are continuing this rally here that happened over the previous, 6 months or so, and they are just extending into a new high, and they are thinking that this, or in general, the market is thinking that this new high is part of that previous rally. It ain't. It's a new high within a correction, and I think people are going to get burned pretty soon in dollar yen, going by this hourly pattern anyway. So three-wave pattern higher. We're actually closing out a trend channel here in wave C. So we have wave A up done, wave B down done, and we have a five-wave pattern closing out now in wave C. I'm not sure if we're done yet, but we're pretty close to it. That's for certain. And I think we'll probably see the top of this pattern come in within the next week, maybe even in this week, and if that's the case, then I think over the next week or so, I'll be looking for a reversal pattern to build, just like in the opposing pairs in euro dollar and in cable. Okay, so if this is going to top out pretty soon, where would I be looking for significant, let's say, breaks to happen? What levels am I interested in? I would like, the only way that I could really confirm that the top is in for wave B and that we have moved down, or confirm that we've moved down into a longer term decline or a medium term decline into wave C, then I want to see a break of that wave A high. So back into the price territory of this previous B wave here. If we do, decline back into the territory of this previous B wave, then I would be pretty much certain that wave one is done. Let me rephrase, that wave C down is underway, and I would be looking for wave one of C to fall back into this price territory here. So between, let's say, 134 and 131, before that happens, if we start, moving with any sort of impetus to the downside again, and we start breaking previous shoulders. So we've got a little shoulder here, about 138.50. We've got a larger shoulder here in wave 4, around 137.50. So we break 137.50 and begin to correct the upside rather than correct the downside. Then we are looking at a reversal pattern building here. And as I do with my subscribers every night, it's follow the pattern hour by hour and extrapolate from there. So that's what I would be doing over the next week or so, is looking for that topping pattern to come in dollar yen. Okay, so that is my take on currencies long term. If you do want to, I know this is pre-recorded, but if you do want to email me, and you can go to the website bullwaves.org, and you can contact me through there, info@bullwaves.org. That'll come to me. My secretary, which is me, will notify me of that email, and I'll get back to you. Okay, so where to from here? I'm pretty much done with my analysis of the dollar. I like to concentrate on the pairs rather than the index. I mean, dollar index is just a basket anyway, so we're just consolidating three. You can consolidate those three charts into a basket itself, and you can get a picture of the dollar index from that. But like I said, it's basically try a reverse pattern on the euro dollar chart, and that'll bring you close enough to what the index should be, the dollar index. Okay, I want to move on. I'm going to move on to the the Dow Jones first, and then I'll touch on gold. All right, I'm going to go to the daily chart, or the weekly chart actually, in the Dow Jones. Let me get a drink. My voice is dropping octave by octave as the more I talk. Okay, so this is a weekly pattern of the 2008 2009 low, and this weekly pattern pretty much confirms that we have topped in, or we are, yeah, I'm pretty confident that we have topped in a long-term third wave. I can't confirm that, but I think the pattern is beginning to swing that way anyway. So we have let's say a completed rally off the 2009 lows, the 08-09 lows. We have a five-wave, solid five-wave pattern. Back in 2020, I actually thought that we had topped out that five-wave pattern, and I did view that decline into the 2020 lows as an impulsive decline, as a larger decline was going to build from there. But I actually got, how would you say, I got blindsided by the ability of people to be, let's say, immune to consequence, or the ability of, how John Husband would put it, would be the ability of people to get the bit back between their teeth again. My oh my, didn't they put the bit between their teeth? But again, that completed fifth wave rally, and I think the pattern that we're building off that high is working down into a longer term decline in wave 4. So if we're topping in a wave 3 high here, I think we'll fall all the way back towards the, let's say, the range of correction within that 08-09 recession. So the final lows, I think we're around 6,500 or so. I think we'll probably fall back towards that between probably 8 and 6,000 on the Dow when this larger pattern is correct or is complete. Now this is a long-term decline, so this will be something that will, let's say, deliver that decline over the next couple of years, possibly maybe even 3 or 4 years. But I think the initial decline will be quite, it will probably unfold quite quickly from here down in wave A. So I'm tracking a 3-wave pattern at least down into wave 4. So initially we'll decline in at least 3 waves down in wave A of that 4-wave pattern. So there's a couple of different ways you can view this. Right now I'm working on the short-term patterns that might develop as we see the next leg down unfold, but I do think that we will fall probably quite rapidly down into this to complete this A-wave pattern, probably towards the end of this year, the first 3 months of next year, depending on how low it goes, depending on how how overbearing the let's say the bearish picture becomes, how quickly the economy falls into recession, how inept let's say the government can be at reacting to it. Inevitably they come too late and they do the wrong thing. So that's that's what they've done before. I would expect that this to be the same. So wave A down should be at least 3 waves, and I think we'll probably move back in towards the middle of this left shoulder here. So we're probably talking about 20,000 when it's done, somewhere around anyway. Let's get the daily chart here, and I'll see if there's anything major that I can give you from this. Apart from pinpointing the high, the previous the high that came in January this year was actually pinpointed by a Fibonacci extension, believe it or not. So actually, if I go to the weekly chart here, if we took the wave 1, this will be a bit rough now, but if we take the wave 1 rally off the 09 low. We take that, the extent of that, and we get a Fibonacci extension, and we extend it from the previous fourth wave. We get a 261.8 extension to a new high, which kind of gave us the ballpark of the previous, or sorry, the all-time high, which was very interesting. So 261% of the red wave one here. If we go to the daily count, I wonder, will I be able to extend that here? Possibly not. If we get the wave one rally of the, if we take the wave C decline and we basically take the Fibonacci grid of the wave C decline and leave it in place, it pinpointed to within a couple of hundred points the actual top of the wave 5 of 5. So we had two Fibonacci kind of confluence of Fibonacci highs, or Fibonacci extensions, that were telling us that we were coming towards a high, along with the pattern internally here that were indicating that we were coming towards a final high for wave 5 of 5. We fell. I will admit it's probably moving into a more three-wave decline. Even if it is, it doesn't really affect the overall pattern. I think we'll still see an extended decline in a C wave, even if this is only 3 waves down. But we did bounce pretty much off the previous early February highs before correcting higher in 3 waves off the recent rally. So I found that was quite an interesting point to reach as well. You can see, I suppose, right now, if we mark that high, that previous, what date were we coming in there? 14th of February high from, forgive me, 2020 high. The 14th of February 2020 high has become a pretty significant pivot right now. So we had the top and the crash form off that high. We had a bottom and a rally form off that high. So if you're viewing it purely from a technical point of view, we break that high again, and I think, or we break that support again, I think we will extend lower quite significantly, and we will probably be talking about matching that wave C low again, so somewhere between 20 and 18 for wave A down to complete. And I'm not sure the market is willing to take that sort of pain, given the extended nature of people's pocketbooks these days. Okay, so that's the kind of overview of what I'm looking at here. At least 3 waves down towards that low. Watch out for that B wave high around 29,500. We break that substantially. I think we will extend lower in that C wave. Okay, so let's get in on the 4-hour count, and I will show you what I'm actually tracking off the top here. That's the previous high that we're working with, wave 5 of. I didn't show the next larger wave count here would be wave 3, so that's wave 5 of wave 3, and now we're working on wave A of wave 4. So at the moment, I'm working with a possible unfolding 5-wave pattern down. So we've got a wave 1, a running flat wave 2, we've got a wave 1, and a flat correction wave 2. So even though it is extended, we had an extended C wave. We have reversed that pretty substantially in the last couple of weeks. We've actually broken down below the previous wave A high. So this has pretty much been confirmed as a corrective rally by the recent decline. The recent decline is a solid 5-wave decline. So again, that sets us up for a reversal pattern. So 5 waves back in the direction of the major trend. And that, again, the break of the previous wave A high, if not confirms, it's a very strong hint that this is actually just a corrective rally that we experienced over the summertime. Now we've come down pretty quickly and broken, let's say, back into that corrective zone again below 31,800. So we've got 3 waves up done in a second wave, and we now should be looking at 5 waves down and a further 3-wave corrective rally to begin a third of a third of a third decline. Now, this is what I would call an acceleration phase. So wave 3 of 3 of 3 is what I'm expecting lower over the next few weeks. First of all, I think there'll be a little bounce, bounce higher in wave 2, and then we'll set up for 3 of 3 of 3 to the downside, probably beginning towards the end of September, if this pattern works out. Again, you're approaching that, September, October kind of dreaded timetable, so don't be surprised if we get an October surprise. Okay, so here we are. We're going to go down, and I'm going to break down that previous decline that we've just seen over the last couple of weeks. So the rally in wave C of wave 2 traced out a nice 5-wave pattern up, and that's what I was tracking over the preceding few weeks of that rally. So 5 waves up in wave C of wave 2, topped out with a slight breakout above the channel, and then a fall down again. So we registered some weakness as we hit the channel, and then at that point we were looking lower to begin a wave 1 down. So what I think is underway now is a 5-wave decline in wave 1, and most likely what we will see over the next week or so will be a 3-wave corrective lower high in wave 2. So at the moment I'm looking at a possible low in wave 1 already in place. Maybe wave 2 is underway right now. Again, this pattern can extend lower. I'm not completely against that. I think I'm probably taking the conservative point of view here at the moment, by calling this recent decline now complete and looking for this second wave correction. Even if we do extend a little bit lower, I think it'll just be an extension of the 5-wave pattern lower. We'll find a new low in wave 1, and we will then work on that second wave corrective lower high. At the moment, I'm looking for wave 2 here in blue to come back up towards the band of resistance between wave 4 and wave 1. So that gives us probably 32,370 to 32,760. So it's quite a tight band. We should see 3 waves rally. Another reason why you might pick that is because it actually comes in right in that left-hand shoulder there. So we would probably create a right-hand shoulder right in the price territory of the left-hand shoulder. Again, that gives us a nice head and shoulders pattern. And I think if that's the case, then over the next week or so, we will be looking at a bearish signal in the Dow, and looking for a sign that we are going to accelerate lower again, just in time for a September, October crash scenario, I think, to happen. If this pattern is correct, that's what will happen. So overall, in let's say that at least the Dow anyway, it'll be watch out for some, let's say, signs of an acceleration phase to the downside in what I would term a third of a third acceleration lower. So this would be like how would you say, a point where real stress will come upon the market. Okay, so I think I've given you a pretty large overview of what I think is happening in Dow. The S&P will probably mirror this quite tightly, so I might be repeating myself later on. So we have 5 waves up complete. We should be topping out wave 3, and we should be heading, into a possible depression scenario, wave 4, over the next few years. If I'm wrong, I'm wrong, but that's what I think the pattern is beginning to show us here. Okay, so I'm going to move on to gold, the first of the precious metals. I follow silver also, but I kind of bounce around between them here. I'm taking the same running schedule as I go within my weekly videos. So if you follow along the weekly videos, you'll be quite comfortable with the way I'm doing this anyway. So okay, so I'm going to go to gold, and this is the weekly chart in gold. Now, long term, I'm actually a bull in gold. You may not have surmised that if you do follow my weekly videos, but I do have to tell people over and over and over and over again that I am actually, at least for the next couple of years, probably a bull on precious metals prices. and I think I am actually taking a pretty conservative, let's say, overall pattern here in gold. So this is the weekly pattern. I am tracking an unfolding. At the minute, I'm viewing it as a wave C up. So this unfolding C wave, this could also be wave 3 up. I have no problem viewing it in that sense either. But for the moment, taking the conservative view of a C wave rally, and this has been ongoing, since 2015, 2016. So what we've been doing is unfolding higher, accelerating higher, correcting, accelerate. We should see more accelerations and corrections, over the next, how would you say, probably 2 years anyway. Definitely next year anyway. I think what we're doing right now is we're completing a fourth wave correction within a larger 5-wave pattern here. So this 5-wave pattern is tracing out a third wave rally. So you can see that wave 3 in black here, and I think that wave 3 in black will probably close out around 26, 2700. We might even rally to 3000. I don't know. But even to close out the trend channel, if we're to get up to that upper trend channel line, we'd probably call it 2700 or so to complete that pattern. Now, right now, I am tracking this fourth wave correction. It's 3 waves. It's almost done. I'm looking at about a 1650 low, and then I will be looking higher in for the medium to long term in that fifth wave. And I think in that case we could see an easy 1,000-point or $1,000 rally in gold as wave 5 unfolds. Okay, so let's get down to the daily chart and I'll see if there's anything. Yeah, okay, so that does unfold the wave 4 correction here that I'm following. So you can see it's been pretty choppy over the last few years. 2 years sideways. In general, it's a ranging pattern. I think if you knew nothing, you'd probably say that this is just consolidating. We'll find a low around support here, and then we will rally again. I don't think you're wrong on that. I think what we're doing in terms of Elliott wave is we're creating a large 3-3-5 pattern. So it'll be it's a complex flat, but it's a flat correction nonetheless. 3 down in A, 3 up in B, and 5 down in wave C. Now, this is where the trick is. When do we get find a bottom in wave C of 4? Now, I will go down. I think we've probably gleaned enough out of this daily pattern to move down to the 4-hour pattern. So I'll go down to the 4-hour pattern. You'll see this C wave final decline here unfold a little bit better. So that's the B wave high. And you can see that we're tracking 5 waves down. So we've got wave 1, 2, extended third wave, fourth wave correction, and now wave 5 down is unfolding as we speak. I think we're very close. We're very close to a final low in this pattern. I do think we will see a new low below, that 1676 low that we registered back in early July. I do think we'll see a break of that. 1680 low back in early July. So at the moment, I think we are on the verge of breaking lower to complete wave 5, and now I'm going to go and I'm going to break out this recent decline in wave in the hourly chart. But before I do that, actually, I'm going to show you, even if we do consolidate again. We rally again in gold, which is it's a distinct possibility. This wave 4, there's no set, how would you say, there's no law that says that this pattern cannot, extend to the side again, or extend sideways and take up more of our precious time to unfold. But if we do extend into a larger correction, we'll probably rally towards 1800 and then fall again. That'll complete a larger 3-wave correction in wave 4 and fall again in wave 5. I think the overall pattern will probably hold and suggest a low around 1650 again. Complete. So what I'm going to do now is I'm going to unfold this recent decline in the hourly count, and you'll see how close I think that we probably are to the end of this fifth wave decline. So there on the low, you can see that I'm tracking wave 5 of wave 5 of wave C of wave 4. So that's the large wave 4 that I was showing you on the daily count and the weekly count also. So you can, the beauty about Elliott wave is you kind of, these nested patterns all fit within each other, and you can kind of, if you are comfortable with the patterns, you can kind of, let's say, you can become, just by looking at the long-term pattern, you can surmise where we should be within the shorter term pattern as well. So at this point in time, I am tracking 5 waves down to complete a fifth wave in blue. This fifth wave in blue will complete that larger fifth wave in green. That fifth wave in green will complete a 3-wave decline in wave C, and that wave C will complete 5-wave decline in wave C. That C will complete a 3-wave pattern in wave 4. So this nested pattern is coming to a close pretty soon. I am looking at that 1650 area to complete 5 waves down. When do I think this will close out? Well, if you do see a break to a new low, and we punch towards 1650, probably over the next couple of weeks. If we get towards the end of September and we're holding around 1650 and beginning to see some strength off that low, then I would suggest that that would be a very good long-term area to start thinking about moving into gold. In terms of the longer term, the alternate pattern that I was showing you on the 4-hour count, if we do track sideways again and complete a longer term fourth wave somewhere out around that 1800 high, I'll just have to deal with that when it comes, because at that point it'll be hard to discern whether it's still a wave 4 correction or if we are going to rally substantially. For the moment, like I said, I'm taking the conservative point of view that we are going to break to a new low, that we're going to complete a fifth wave, and off that low, I think if we build a significant 5-wave rally, we break above 1800 again, and then just if we continue to build higher lows off that point, then I think longer term we are in for a long-term rally again. And like I said, in terms of the daily count, I think wave 5, or if we go to the weekly count, actually, that will show us more substantially. I think that wave 5 could push towards 2700. So we're talking about $1,000 rally in wave 5 of wave 3. So suffice to say, precious metals, it's been a tough year or so, or a couple of years, but I think we're forming a low, and I think a rally is coming. Okay, so let's move on. I'm going to move to crude oil, and I'm going to show you what I think is happening in crude oil. This will not be, among the, top 5 views of what is going on in crude oil, but I think I am an avid contrarian, so I do tend to like to think opposite to what the general consensus is. Okay, so now you can see this is my weekly chart here in crude oil. You can see that's the 08 high. Back in 08, nobody thought that there was going to be a decline, but the wave pattern was suggesting that. So what I think what has happened off that wave 5 or that 2008 high, I think is we have basically gone sideways in a B wave correction. So that was, a 3-wave consolidation pattern is now underway. So I think what is happening off that 08 high, that 148 or 147 high that happened, is a large 3-wave pattern lower. So which will explain the basically the sideways grind that's been happening. Serious rallies in there, but sideways grind nonetheless. And I think we've topped out pretty significantly in the recent months as a B wave. So we've got 3 waves down in wave A. We've got an expanded flat correction in wave B. And I think wave C will probably bring us back down towards, the previous lows. So that sub $20 crude oil when wave C is done. So maybe even sub $10 crude oil when wave C is done. If we do move into a long retracted recession slash depression in the West, which it seems more and more likely that that's exactly what's going to happen. I think the inflation story will disappear, and I think the deflation story will raise its head, its ugly head, over the next few years. And I think crude oil will just go with the flow on that. I don't think there'll be any way of stopping it. It's going to decline, and I think we will eradicate the rally that's happened since the 2020 lows. So it'll be a full circle, 5-wave decline, down in wave C to complete below, maybe even down as low as $10. So if I'm the only one that's saying that, well, maybe you should take it with a pinch of salt at that point. But if I'm the only one that's saying that, it's because, when everybody else is saying one thing, you should probably look the opposite way. Okay, so let's get into a short-term pattern. Overall, looking for a long-term decline, but short-term patterns can allow for rallies within that pattern. So I think what has happened so far off the, let's say, the March, February highs here is we've impulsively moved lower in wave 1 when we've tracked higher in 3 waves, bearish lower high in wave 2, and we have a series of 1-2 patterns going on here, I think, off that wave 2 high as well. So we are building the case for an acceleration lower into a third wave. That third wave down in wave C should bring us probably back below the $50 mark. We should break through that previous corrective left-hand shoulder there, probably with ease. So back below $62, somewhere down around $50, we'll probably find a consolidation build again. So in general, in the medium term, looking for the market to move lower in a third wave, and I think that will probably come along with basic acceptance in the world that the recession has started, or the long-term, let's say, Western recession has started anyway. We can already see that China's moving into recession. They're selling off their gas reserves, so they know it's coming too. I think that this third wave decline will be coincided with a recession in China, a recession in the West. I don't think the rest of the world will be able to push against that major headwind. So you can see here that I've actually I've pretty much come to the idea that we have moved into a third wave down, and we are actually tracking a series of impulsive waves lower into this third wave decline. And this third wave decline should pretty much point you or signify or tell you what's going to happen in the larger economy. Okay, so here we've got crude oil on the hourly count. So how is this burgeoning or developing impulsive pattern lower? How is that actually developing right now? So I think we've got a wave 2 high. So you can see back in July we had a wave 2, a possible candidate for a wave 2 high anyway. And off that high we had a 5-wave pattern build to the downside. We have a 3-wave pattern higher. So it's an expanded flat again, higher in wave 2. And then we are moving impulsively lower again. So this impulse wave down it can be viewed a few different ways. We could have a leading wedge pattern here. We could be already within wave 1 and 2. I'm kind of, again, allowing this time, allowing for a larger correction in wave 2, kind of a more, let's say, more defined lower high in wave 2 before accelerating lower. So I'm not immediately bearish on crude oil, but probably over the next few weeks, I think we're going to top out this second wave and move substantially lower into a third wave down. And this again will be a third of a third of a third. It'll probably come along with a, excuse me, it'll come along with a, I've got a bit of a cold going on here as well. And I've been talking for the last half an hour. So this third wave decline will come along with the third wave decline in the stock market. I think both will march happily lower hand in hand when it does happen. So you can see that I'm tracking this impulsive pattern to the downside. This should give us a read on when the major decline is about to happen, but I think you can probably pencil it in for before the end of September anyway. Again, giving this another week or so, or a couple of weeks of corrective patterns in wave 2, a grace period in wave 2 to close out before accelerating lower in wave 3. Okay, so I think that's me done for crude oil. Let's move on to the S&P. Now, the S&P is going to mirror the Dow pattern pretty substantially. So you can see that we've finished a 5-wave pattern rally, or 5-wave rally at the December highs in 2021. So the early January move lower began what I think is a longer term correction down again into a 4th wave decline. I think if this is wave 3 top is done and we are moving into a long term 4th wave decline, I think you could pretty much count this as a depression decline in the larger market. And I think again we should probably, in terms of Elliott wave, let's say suggestions or guidelines, we should probably track lower in this correction towards the previous low of the correction at one lower degree. So this 4th wave low back in March 2009 came in at about 670 or so. So we should probably overall, I think this decline into wave 4 in blue will probably track towards that, 600, 650 way or price area, or let's say once we do get a good indication that wave A is complete. So this wave A will probably track towards that or target that 2020 low, so about 2100 again. So once we do know what's happening in wave A, then we'll be able to make larger projections for wave C down. So right now I'm kind of tracking this wave A down, whether it'll be a 5-wave decline or an overall 3-wave decline. I don't, we still pretty much have the same kind of target area, about 2100 or 2000 for wave A to find a low. And once we do find that low, then I'll be looking higher in wave B. But I do think, over the next 6 months or so, I think we'll be, moving into a crash or in a crash scenario in the larger, broader market. So look out below, I think, for wave A in the S&P. So the daily count, again, tracking the top, it doesn't really. I'll get to the lower shorter term charts to show you the internal pattern, but I think we're probably tracking. It's either a leading diagonal pattern, so this would be a wedge pattern lower to begin this long-term decline. So that's either a wedge pattern to form a wave 1 or a wave A, and that's definitely a 3-wave correction higher in wave 2 or wave B. So we'll go into the shorter term charts. Excuse me, I'm I'm coming along with tongue twisters here. The shorter term chart will give you the internal pattern here that I'm working with. So here's a 4-hour count. You can see that I've been tracking a 5-wave decline and a 3-wave correction higher. The recent lower high actually came to just above the 62% retracement of the wave 1 decline. So wave 2, targeted a pretty standard price point or retracement point for a second wave correction, so 62%. We were actually looking at the previous 4th wave high as well. So I was actually giving a target area between 4200 and 4250 for a high in wave 2. We broke above that and then we moved substantially lower off that. So the same, I'm gonna rattle off pretty much a lot of mirror points of what I showed in the Dow recently. So it's a 1-2 pattern lower, and we should be heading down into an acceleration phase in wave 3 of 3 pretty soon. I've gone to the hourly count, and I will pull apart this correction higher, and I'll show you what I'm thinking here. So that wave 2 high, it tracked higher in 5 waves. It was a bit of a bugger to actually track or to trace that as it, or to track it as it was tracing out. But suffice to say, it did trace out 5 waves up, as you would expect in a C wave rally. We've turned again lower in a pretty impulsive looking move so far. So we've got 5 waves down, I think, completing wave 1, and now we're working on wave 2. So if we do take the recent low as wave 1, then I think we'll look at that previous 4th wave between the wave 1 low and the wave 4 high area as a target for wave 2. And actually, if we get a Fibonacci retracement in here as well, gives a ballpark on the fib levels, that does bring us between the 38 and 50% retracement levels. So again, it's right among that let's say standard retracement band, Fibonacci wise and Elliott wave wise. You can see here again we've got that left shoulder built around that 4th wave triangle, and we would be correcting higher with back into that price area of the previous 4th wave high, or sorry, 4th wave low. Again, it's forming a nice kind of head and shoulders pattern in a wave C high, a wave 1 and 2 right shoulder, and then I'd be looking for an acceleration phase lower into wave 3 of 3 over the next few weeks. So right now, if I'm correct here, then I think we will be stuck within a kind of a ranging move over the next week or so. Obviously, like I said, this can change from day to day, but for the moment, I'm tracking the second wave lower high. I'm looking towards, between 40.70 and 4100, or 40, let's say 41.10, for the second wave correction to close out, and then I'll be turning my focus lower again into a third of a third wave decline. If that happens, again, it'll be a story of look out below, because here come the good times is not what we're going to be singing. It'll be here come the bad times. Okay, so I think I've given you a picture of what I think longer term down to short term in the S&P. That's the weekly chart again. So 3 waves down in wave 4 overall. You'll be overjoyed to hear that I'm looking for a depression. You won't be overjoyed, but that's what I think will be happening over the next significant number of years. Okay, right. I'll go into silver now, actually. So I'll go to the daily count in silver. You could probably say that I am even more bullish in silver than I am in gold. You might remember that I'm looking towards that kind of $1,000 rally maybe in silver or in gold over the next year or so. I think in silver we will probably get a clean triple of prices over the next year or so, if this pattern is correct. So I think what we have seen over the last year, or 2 years actually, is a 1-2 correction. So this 1-2 correction is about the most bullish, a 1-2 impulse wave. It's about the most bullish you can look for. I think we'll get a third wave rally, and I think we'll probably challenge that previous all-time high in silver back around $50 again when we're done here. So a third wave rally will probably be a 250% rally, maybe a 300% rally by the time it's done. And I think right now we are coming close to let's say a capitulation point within the bearishness of silver, and a significant pattern point as well. So I'll get into to show you. Here is the daily count. You can see that wave 1 rally. We've tracked higher in 5 waves in wave 1. We've traced out 3 waves down in wave 2. It's a pretty an extended, or let's say a complex flat correction. So 3 down in A, 3 up in B, and then 5 down in wave C. We're back towards the 62% retracement level. We've filled out a trend channel decline within this decline. The wave C is pretty close to completing, and I think if you track me now for over the next few minutes, you'll probably agree with me that this 5-wave pattern within wave C is close to a low as well. So let's get this is a 4-hour count here, and you can see that wave C of 2 is tracing out 5 waves down. Now, whether we could call this wave 3 here and wave 4 here, and maybe that's more fitting. You could probably take both point of views on that. We did break to a new low. I do think that we will be forming a or we are actually seeing, let's say, the beginnings of a momentum reversal, at least on the 4-hour count. We've double bottom momentum. We've got new price lows. We should see, let's say, RSI is almost about to break back above the middle. So I think we will see some form of a rally form soon enough, and that may well be the end of the overall 2-year correction in silver. So I'll get into the hourly count now, and I'll break out that this most recent decline, and I'll show you where I think we are within that pattern. Okay, so depending on how you count this, we have broken to a new low, but depending on how you count it, we are very close to completing 5 waves down in a large 5th wave here in green. So you can see I've got wave 1 and 2. We are tracing out an extension in wave 3. We should move lower again, I think, back below that's that previous consolidation low. Where was that? We're right at that now, that 1813 level. As we track 5 waves down, we should break to a new low. I'm looking towards the 1650, $16 mark, between $16.50 and $16, I think, for this pattern to finally bottom out. You can see if you take the extent of wave 1 in the Fibonacci grid and you place it off the wave 2 high here, that 161% extension of wave 1 gives us a low about where does it come in? About 1597, 1599. So we will probably grind a little bit lower here, between $17 and $16. We'll find a low, I think, for wave 5, and at that point I'll be looking substantially higher for a signal that wave 1 is underway. So if we're bottoming out in a long-term second wave, I think, like I said, wave 3 could give us a clean double, if not a triple. Maybe even back to a new high above that wave A high, that long, the 2011 high back around $49 or $50. I think we could break that high in wave 3 of wave C. So I would be watching for that. I think a confirmation of that long-term rally will be if we break above the wave 1 high. So, $30 again should be an unleashing moment, probably a third of a third of a third. I think we'll accelerate off that. This will be probably against the background of extreme fear. And it may be within, the initial crash phase of the market, the stock market. So, extreme fear, people will run to the precious metals again, I think, in this scenario. So, I think that's done for silver. I'm going to go to Bitcoin, and I think at that point I'll probably close out my presentation. How far have I gone now? I'll just get a time on that. So we've done an hour and 13. Oh gosh. Okay, so I've gone too far. Bitcoin. I think longer term Bitcoin, we are probably heading to new lows, I think, and I'm not going to be, let's say, I'm not going to be too, sensational about this, but I think we'll probably push back towards the consolidation areas of the corrections back in March 2020. So I think we'll probably fall back towards the 5,000 area by the time this longer term correction is complete in in wave B here. So I'm tracking 5 waves down in wave C, complete wave B. And I think we will see a complete capitulation in the Bitcoin market and probably the cryptocurrency market in general. You can see this 5th wave of wave C, along this C wave decline will bring us down towards that $5,000 low. So you can see that we're tracking 5 waves down in wave 5 of wave C. So 5 waves down is not complete yet. The recent decline, I think, is probably only wave 1 of this final 5th wave. And I'll get into the hourly count now. And you'll see that we'll probably close out this trend channel somewhere down between 3 and 5,000. If we go to the hourly count here, you can see I've got a 4th wave high. We were tracking that ending diagonal 4th wave as it was happening. We touched 25,000 again, and then I was looking lower immediately for a wave 1 to begin. So this will be wave 1 of 5. We're closing out wave 1 of 5 pretty soon. So there's 5 waves down in wave 1, and we'll correct higher in wave 2. So I think shorter term we'll probably see a rally in Bitcoin somewhere up around 21,000 again, 22,000. Second wave correction, and then it'll be a plunge again into a medium to long term decline again in wave 5. So that has been my long and extended presentation. I want to thank you for giving me the opportunity again to do this, and thank you for listening. If you did stay to the end, check out boas.org, and that's where I reside. If you're interested, give me an email, and we'll be in touch. God bless you all. Thank you for watching, and I wish you a pleasant week and a blessed life. Okay. Until we meet again, bye-bye.